I'm your host, Irene Cho. We have a special guest speaker today, Nancy Rosedale from Boston. Yeah. Um, this webinar is brought to you in partnership with the City of Los Angeles Economic and Workforce Development Department, Business Source Pico-Union Westlake region operated by Pace Business Development Center and Bank of America. This webinar will be recorded and you may find it on our website, e-library, after about a week. You can wait, give us some time and our marketing team will upload the video. Um, just a little housekeeping before we get started. Please mute yourself during the webinar. We will have the last 5-10 minute Q&A session. So please ask the question during the Q&A session using raising hand emoji or writing question in the Q&A box. Before we get to the topic of the day, I'd like to introduce PACE briefly. PACE is a Pacific Asian Consortium in Employment, and we are a 501 nonprofit organization. Our PACE Business Development Center provides many counseling service for local small business owners. We also provide free webinars and training to accommodate your business to take to another level. We have various loan programs you can apply to your business. So if you have any question, please feel free to visit our website or give us a call. We have upcoming webinars regularly, so you can always check our website and register. Past our webinar recording, please visit our e-library. Please give some time for our marketing team to upload the recording. It might take about a week or two. Okay, let's get started. And then on our today's webinar, please welcome Nancy. Nancy, please unmute.
All right, here we go. Irene, can you hear me?
Yes.
Wonderful. Well, hello, good afternoon to everyone. Thank you for the warm welcome. My name is Nancy Rosedale, and I'm a business community officer with Bank of America. And Irene is right. I'm on the other coast. I'm all the way in Boston, Massachusetts. I've been with the bank for about 13 years. And I've actually been working in credit and lending for about 32, 33 years. So it's something that I'm very passionate about, and I'm really excited to walk you through today what it means to build a business or build a financial foundation. So Irene, I know that we are muting our participants, but I do want to throw caution to the wind for a moment. This presentation is actually a little bit more engaging than most at the very beginning. So with your permission, we may ask the participants to come off mute so that they can answer some questions. Okay?
Oh, okay. I'm gonna allow to talk to everyone.
Okay, wonderful. We're a small group, so I think it's going to be fine.
Yeah.
So we have 3 objectives this afternoon. So one, I'm just going to provide a basic overview or a summary of many of the really basic banking terms and processes. We're also going to talk a little bit about, how do I create a budget? How can I save money and really manage my debt? And then lastly, credit. Personal credit is so important, particularly when we think about becoming founders and entrepreneurs and going into business for ourselves. So that's our agenda for today. And get us started. This is where I will ask each of you to not be shy. I'm going to ask for a little bit of engagement. I believe you're not on mute. So we're going to get through this together. So if there are questions that you really don't know the answers to, you can lob out a guess. And I, of course, will help you with the correct answer. So to get us started, let's see what you do know. So this is a true or a false question. I'll read it first and give you some time. So all funds from non-cash deposits made to your personal or your business checking account are available for immediate use. Is that true or false?
False.
False. Excellent. I don't know who that was, but great answer. And why is that?
I'm assuming they have to verify that the funds are available on the other end.
Right. So I think here the key word is non-cash deposit. So if you walk up to a teller with $100 bill, that's going to be available immediately. However, if you have a check for $3,000, the first 400 is available immediately the next morning by federal regulation. The bank may put a next day hold, or if it's a brand new account or they don't know you very well, they may put a longer hold in the account. So just a tip, when you open your business account or even a personal account, you always want to spend time with your banker asking, hey, what are the rules for new account holders? How long could you potentially hold my money? So great job, whoever answered that. Question 2. This is a tough one. So what's the difference between the interest rate and the annual percentage rate, or we call it the APR, that the bank charges you for a loan? This is not an easy question, but an important one. Anybody have a guess?
Yes, I'm gonna try.
Okay,
Yeah,
is it Simeon?
yes, I'm Simeon.
Hi, Simeon.
I,
Nice to meet you. Go ahead.
Nice to meet you too. I think that the interest is exactly the interest you sign up and say you're gonna pay, like a 6% interest.
Okay.
But the APR is when you fail to pay, and now additional interest may be higher. The APR will be higher, maybe 28%. That's what I guess.
Wow. Well, you know what? I'm glad that's not the right answer. Oh my goodness, a lot of us would go broke. But you know what? I applaud you for trying. So you're half right. Does anybody else want to try, or we just want to get the answer and understand the difference? Let's go with the answer, because this is a really important concept. So every loan that you have, whether it's on the personal consumer side, maybe you have a car loan or a student loan, or one day when you have a business loan, you're going to pay back the interest, as Simeon said. That's the rate of the cost of the money. So he used 6%, which is a decent interest rate. But the APR is actually the amount of interest that you would pay over the life of the loan, because sometimes there are some small fees that are paid up front when you first get a loan. I'll give you an example. When you do a car loan, sometimes there's a recording fee of $70 or $80, depending upon where you live. Or you might have a late charge. God forbid you were late. So the APR really looks at the entire loan from beginning to end. So the idea is, if the rate is 6%, you really want the APR to be very, very close to 6%. So Gideon, I applaud you for volunteering and being courageous, but thank goodness it's not 28%, right? That would be exorbitant and definitely not fair to the consumer. All right, so moving along, question number 3. I love this question. It's fine to combine your personal and your business banking. So your personal checking and your business checking, money in, money out. Is that true or false, and why?
False.
False. And why is that?
Well, as a loan counselor, I always encourage to my client to separate the business and personal banking, the account, because if you can track to tax record or any other business operating if you combine the personal and business account.
That is correct. So in the business world, we call it commingling. Commingling. So when you're a sole proprietor, meaning that maybe you first start out with your business and you have not yet created a legal entity like a corporation or an LLC, all of your income for the business would flow through your personal tax return. That's okay, but you still should have your own personal checking and your business checking and keep them separate. And the answer says on the screen, it's really for tax, like record keeping. So if you ever get audited or you need to prove your income, if you're applying for a loan or a grant or any sort of crowdfunding, you really do need to have separate finances. And then the law states that once you incorporate, if you ever become an S Corp or a C Corp or an LLC, the law states that you cannot combine your personal and business finances. And the reason is that once you are a corporation, the IRS sees that as a corporate shield. It shields you from your personal finances. So God forbid you were sued, anyone trying to come after you would only be able to access whatever is in the name of the business. It would not impact your home that you share with your spouse, your partner, your children, or your life savings. So it's always a good idea to separate things and seek legal counsel from an attorney and a qualified CPA, which I, of course, am not. But great answer. Thank you. Number 4, having a good credit score and a history of paying bills on time will boost your chances of getting loans and other types of credit at lower interest rates. Is it true or false? Lee?
True.
Yes, that's an easy one, right? So we know that the stronger your credit rating, the stronger your credit scores, typically you'll qualify for preferred interest rates. Now, it's not to say that if you have some challenges or bumps in the road, like most of us have at one point or another, it's not to say that you can't obtain credit. Typically, the interest rate might be higher and the terms might be a little bit more restrictive. And there are ways that we can help you rebuild your credit. So if you have any credit challenges, at the end of the presentation, I am going to put some of my contact information on the screen, and you can reach out to me for a confidential conversation. Number 5, why does it make sense to check all of your credit reports from each bureau at least once a year? Alicia?
Yes.
Yes. And why is that? Why does it make sense?
To make sure that
Because
there are discrepancies.
you want to make sure that all the records are up to date, because
right.
you may pay something somewhere and the bank forget to send the information to the credit bureau, and this will be a bad reputation.
Yes.
Eh,
So I think I heard it's either Alicia or Alicia in the background. Can you tell me the names of the 3 credit reporting agencies?
Experian, TransUnion, and Equifax.
Very good. Excellent. Excellent. Thank you. The reason why we encourage you to check your report once a year is actually twofold. One, you are entitled as a consumer to 1 free credit report per year. If you go through annualcreditreports.com, it'll be complimentary, no charge. And also, to the point that you just made, I didn't catch your name, but thank you for jumping in. A lot of the information can vary between the 3 credit repositories. For example, if you do a car loan with a dealership down the street and they end up sharing your information with a smaller, like less known bank, and you end up doing a car loan there, they may only report to TransUnion. or they may only report to TransUnion and Experian, and then they, you wouldn't have that car loan with Equifax. Or sometimes they make mistakes. I'm not going to say they forget, but sometimes the information isn't transmitted properly. So you do want to make sure once a year that you're pulling all three. And what I do, I try to order my credit report on my birthday or right around that time in January when I'm turning a new year. This way I won't forget. You also want to make sure that you're not the victim of identity theft or any fraudulent activity. And it does happen. I know we have about 19 or 20 people on the call with us. Raise your hand if you've been the victim of identity theft. And when I say raise your hand, you can do so with the Zoom. You can just raise your hand with the technology and not your physical hand. I've been a victim, and it looks like I'm seeing some hands raised. It happens more than we'd like. So in addition to reviewing your credit reports, I would advise, obviously enrolling in online banking for your credit cards, your checking account, your savings account. And then there are some services that you can enroll in for actually very inexpensive money, so that they actually proactively look at all of your credit in your accounts on a daily basis, and they report back to you if something seems a little odd. So I always recommend that our participants in these types of classes know about that and take advantage. Now we're going to talk about budgeting. Budgeting can be hard. So who would like to help me share with the group, what do you think? What are some of the benefits of establishing and then maintaining a budget? Anybody want to take a guess? And by budget, we really mean thinking about how much is coming in terms of cash flow, and then what do the bills look like? What are we responsible for paying? And then how do we make sure that we have enough at the end of the month to make our payments? So what do you think some of the benefits are of putting pen to paper and establishing a budget? No volunteers. Okay. That's all right. That's why we're here.
Yeah, I'm Simeon.
Oh,
I'm gonna
Simeon.
volunteer.
Okay.
Yeah, I am the one who jumped into the answer
Okay.
recently. So I think that budgeting make us uh keep our expenses on track,
Mm-hmm.
and this will also help us see the activity that is bringing money, and that the activity which is the making all lost money, so that we may switch, we may fix the issue,
That's
or
right.
we may reroute our idea.
That's right.
That's what I guess.
You nailed it. That is exactly how we look at things. You want to anticipate the future. You don't want to have, a balance in your checking account of $2,000 and you purchase supplies and materials and inventory and you owe $4,500 at the end of the month. We should always anticipate that. One, because it's very stressful and you want to have peace of mind. Two, you want to have control over your business or your household finances. And you want to make sure that you maintain a good credit rating. You're going to keep your vendors, your suppliers, all of your creditors happy. And you're going to be able to do the same thing the following month. So managing your debt, anticipating what's coming in and what's going out is a really critical role of running a business. And it's something that I always felt that we kind of inherit our cash flow and our budgeting mannerisms and patterns kind of from our parents. It's not something that was taught to us in high school, or at least not for me, or even in college. So the way that we see money and how to balance our book, so to speak, sometimes comes from how we grew up. And I see something in the chat from Tiffany. Thank you, Tiffany. It says, well, if you can budget, that will allow you to see profit and loss. And that is absolutely spot on. Thank you, Tiffany. All right. So we're gonna get a little bit more intense here in terms of talking about the business. So guys, think about the expenses that any business has each month. What is an example of a fixed expense? What would a fixed expense be versus a variable expense? Whoops. Sorry about that. We can't let Simeon answer all the
Yeah.
questions. I know we have a lot of answers
Yeah.
in the room.
But yeah, that's why I didn't want to answer, but I think that a fixed expense is something predictable. We already know the amount, and it will be the same amount every month without any
Yes.
variation.
All right.
So
Thank you for kicking us.
it will be like my phone bill prepaid. So I already know that I have a subscription with Verizon costing me $200 per month. No
Wow.
variation for the 36 months.
That's an
Thank you.
expensive one. Thank you, Simeon. So I'm going to let some of your teammates jump in since you provided us with the foundation. So Ezekiel, Jeanette, Candace, Lee, Davion, can you give me an example other than a phone bill for a business? What is a fixed expense? Lee. I think you're on mute. Ezekiel or Alicia? I think you're all muted.
I would say rent.
Mortgage payment or your rent?
Yes. Yep, you nailed it. So rent, mortgage payment, I would say a car loan or truck
Yeah.
loan.
Yes. Insurance? Would
Insurance,
insurance?
as it says in the screen. Maybe like an internet bill or some kind of a subscription for the office. Maybe IT services. Sometimes businesses have what they call retainers with CPAs or attorneys. In other words, it's a fixed expense that they pay an attorney or a CPA every single month, so that they always have counsel. So those are some fixed expenses. Do we have an example of variable expense? What might go up and down as we think about owning a business? Is it
Guys,
Alicia or Alicia who has their hand raised?
Alicia, I was gonna say your
Alicia.
credit card.
Yes, that's a good one. Thank you. Pretty name, by the way. Who else?
Office supplies,
Yep.
station.
Yep.
Office supplies,
Maybe conferences that you have to attend for certifications.
That's right. What about supplies? What about inventory? Do you think those are the same every month, or do you think they go up and down based on seasonality, availability, things like that?
they are variable.
They're all variable. And we have in the chat, Alberto, thank you, said taxes. I think taxes are going to be a fixed expense. Payroll, what do you guys think about that? Jessica included payroll in the chat. So Jessica, do we think payroll is fixed or variable?
It depends.
It does depend. Yes, that's exactly right.
If you are paying people with salary, it might be fixed. If you are paying people hourly, it might be variable.
That's right. That's right. You guys gave me great variable examples. They're basically things that maybe don't occur every single month, or if they do,
Because they can have overtime depending on the season.
Yep, overtime, sickness, vacation. What if something breaks? You get that unexpected bill to fix a backhoe or a laser machine. That's definitely a variable. We don't look forward to those. So the reason why we want to budget is because sometimes, even though we're careful, and we're using QuickBooks, or we're being proactive with profit and loss statements and balance sheets, there are some expenses that come up that we really can't prevent. So it really does matter when you have to think about saving, budgeting, managing debt, getting the best interest rates. So that's really why we're here. So thank you for jumping in and kind of helping me steer the discussion. So we're going to continue to talk about budgeting, saving, and managing debt. So there are typically 3 steps when we think about managing our budgets and coming up on the positive side, if you will. So for a lot of you, I apologize, the screen is a little bit small, but this is a sample budget and it's pretty basic. So I'm just going to read, for those of you who might not be able to see, just some of the high level points that are included. So on the top, you have income, and it's a calendar from January to December. So much like you would run your household, we do the same thing in business. So what's coming in the form of revenue? What's coming in the form of any sorts of payments or reoccurring income? And then we have our expenses. And you guys did a really nice job of calling off or calling out our fixed expenses like rent, like insurance or a mortgage, like streaming services, IT plans, legal bills. And then we have, on the personal side, variable expenses like shopping, food, gas, things like that. We apply the same principles as we do when we balance our budget at home as when we balance our budget in the workplace, okay? Now, some of you may be using an accounting system or thinking about using an accounting system. There's QuickBooks out there, there's Intuit. You just want to find one that you find that's easy to use, or if you're working with a bookkeeper or you're working with a CPA, they sometimes have a recommendation. If you're in the massage business or anything regarding wellness, there's specific software for budgeting for businesses like fitness, massage, nutrition, things like that. And then if you're on the other side, you're a contractor or you're an HVAC or you're a builder, there are specific software programs for people like you in the trades, because there are different expenses that come up for contractors and builders versus what a massage therapist might need to run his or her practice. Okay. So that's a basic concept that I think you all need. And then when you think about a budget, think about a conversation you might have had with your daughter or your son, or if you're not a parent, maybe a niece or a nephew. There's a difference, right, between wants and needs. I remember my little niece, Brookie, used to say, "Auntie, I need it. I need it." And it may have been, an outfit at a very expensive store or, whatever the latest trend was, she needed it. And I kept saying, "Brookie, honey, you don't need that $200 sweatshirt or something from Lululemon. You want it. There's a difference." And it's the same thing when we think about business and how we become successful. So the best thing you can do is keep checking in, as it says. And basically what that means is always keep your books up to date. When something changes, you need to update it. If you get something in the mail that says that your insurance premium is going to go from $1,700 to $2,500, you need to update that. You need to put that in your budget. Or if you have a customer who is paying you very slowly, and instead of paying you, say their bill is $1,000 a month, they're only paying you $250 a month, that too is going to impact your profit and loss. It's going to impact your cash flow. And guess what? It's going to update or impact, I should say, your budget. So just some tips to be aware of. When we talk about analysis by paralysis, that means that sometimes we let all the data and all of the information kind of paralyze us and we're not able to make a decision, or we're not able to really come up with a budget because we're letting the data kind of govern everything that we do. The what ifs. Well, what if that client doesn't pay me the $1,000? Or what if my insurance keeps going up? My recommendation is to sit wherever you are, make sure that the numbers match today's situation. You have to start somewhere. And as it says on the screen, an imperfect budget is better than not having one at all. Okay? You can always amend it, you can adjust it, you can even overestimate and be a little bit conservative. So if a customer owes you $1,000, maybe you put in your budget $700. If your insurance you think is going to increase to $2,500, maybe you put a line item in there of $2,800 just to give yourself a cushion. But make sure you start somewhere. And then left-hand corner on the bottom, it says your budget's not working because, quote, it's too complicated. So maybe you started your budget and you did really well for a couple of days or even a couple of weeks. And then you had a long weekend and you went away with your family. And you came back to work and you were very, very busy and you just stopped tracking things. And it got a little bit out of control. That too is why your budget's not going to work. The advice I'll give you is just pick up where you left off, find some quiet time before the kids get up or before the day gets busy. Whether you do it weekly or monthly, you definitely want to input all of your entries, what's coming in and what's going out, so that you can get ahead of things and plan for the next coming weeks or months. Okay. And then right-hand corner, life changes. Life does change no matter how prepared we are. We have these one-time events sometimes, whether they're emergencies or surprises. And, you know, the most obvious here is I hate talking still about the pandemic, but COVID was a huge life change for the entire globe. None of us saw that coming, and a lot of businesses didn't make it. And if it can happen once, something like that or something similar could happen again. So our advice to businesses, whether they're big or small, is always have an emergency fund and try not to tap into it unless it's really critical. So it says here on the screen, have an emergency fund and establish criteria for using it. So let's go back to that wants versus needs. So wants might be, hey, I think I might want a bigger space. The space is fine today, but you know, I saw this really cool loft space in the city a couple weeks ago, and I really want that because I think it would change the image of my business. Versus a need is my space is too small. We have, you know, 10 salespeople here and only 5 desks. There's nowhere to put anyone. And we're not growing as a company because we don't have enough space. So there's a difference between that, you know, wants and needs. And that too should be a part of your budget. And then lastly, my favorite, when I think about Amazon all day, the buy button. So who doesn't love a discount? Who doesn't love a sale, right? Right now, I think there's Prime Days or something going on right now. So everything on Amazon allegedly is on sale. Before you hit that buy button, think about the fact that those small purchases that we make add up to big purchases. So can you really afford it? Do you need to stream that movie? Do you need to have a brand new Tesla, or can you purchase something pre-owned? So all of those little decisions really impact your budget, which in turn impact your success or lack thereof for your business. We've got 2 more. So we've got reoccurring payments and you're a giver. So I don't know about you, but I seem to have a lot of reoccurring payments that I tend to forget about. Whether it's Duolingo, you know, I sign up for the greatest plan because I'm trying to learn Spanish, or it's something that I bought on Amazon, like kitty litter or something for my cat. It's reoccurring. Sometimes those get out of control and we forget about those. We forget to cancel them. So just a reminder to take inventory of what's going out of your account automatically and cancel anything that you really don't need. And then lastly, you're a giver. So I'm definitely a giver. I can't help. I feel like I've been blessed so much in my life. I want to help everyone that I meet. I want to share what I have, but sometimes you really do need to stick to a budget. You can still give and be charitable, but you have to do so within your means. So you pay yourself first, you pay your bills, and then hopefully there's something left over so you can be charitable, support foundations, support people who have less than you do. And, do add it into your budget so it's documented and keep your receipt. All right. So we talked about budgeting. Now we're going to go into saving. So this is something, honestly, that I didn't really take seriously probably until my 30s. And I'm in my mid 50s now. So when I was younger, I thought, when I get a paycheck, I should put every cent to good use, right? I always had a good credit rating, but quite frankly, I basically spent everything I made. And then I hit 30, I was a homeowner and I started to buy additional properties. And I realized, hey, the most important person that I need to pay when I get my paycheck is myself. That's a priority. So I started making it reoccurring at my bank. So whenever I got paid, I automatically saved $250 every other week, and it adds up. So you don't have to save your whole paycheck. You don't have to save an exact amount. If 250 seems high, then lower it. Even if you can do something as small as $25 or $50, it's $25 or $50 that you didn't have before. And then the power of compounded interest every day, that $25 or $50 is adding up because of compounded interest that's accumulating. So it says here, go slow and go steady, but make sure to pay yourself, okay? Not just your creditors. And then lastly, we're going to talk about managing debt. So most businesses I know have debt. Having business debt does not mean that you're not running a good business or that you're not fiscally sound. It really doesn't. There's good debt and there's bad debt. But you should still have a strategy in terms of how you're going to pay the debt. So if you have a balance on, let's say you have a couple of credit cards, we won't name the banks, but bank A, bank B, bank C, bank D. The best advice that I can share with you is the snowball method. And I think you probably already know this. Of course, you always want to make the minimum payments on every single credit card, every loan you have, in order to maintain a good credit rating. The second thing you want to do is attack the lowest balance first. So if you have 4 cards, one has $200 as a balance, the next one has $750, the next has $1,300, and the biggest one has $2,200, you want to pay the smallest one off and get rid of it, and that will improve your credit rating right away. Then you can take that payment, what you used to pay, and put that on the second highest credit card. And then in time, you will eventually pay off all of your debt. And I have to tell you, it's also a mental play, psychology, because you're going to feel so good. You started out with 4 credit cards with balances. Now you only have 3. So small steps. The second method is, of course, making all the minimum payments to preserve your credit rating, and then attacking the highest interest rate on your balances. So credit card interest rates right now, if you have them, are probably double digits. Unfortunately, probably close to 20%. Do your research, make a list. You could also attack the one with the highest interest rate and pay that first, and then the second, third, and fourth. It's a very simple principle. And then lastly, if you have a good credit rating, I'm going to guess that most of you on the telephone receive transfer card balance requests probably once a week from different banks. Now, the trick is, in order to get the interest rate that low, whether it's 0%, 2, 3%, you have to pay attention to the term. So make sure that you read the fine print. Are there transfer term fees? So if you're transferring $5,000, if there's a 5% fee, that's going to cost you $250. Is it worth it? So there isn't a yes or a no answer. You have to do your due diligence and really think, about whether or not it's worth it to add that into your outstanding balances. And then second, how long is that intro rate going to be? Sometimes we see 3.99, 2.99, but they're only for 6 months. So if you can't pay the full balance in 6 months, what is the new interest rate going to be after that period? And you can see the little picture down below. Sometimes the offers start as low as 0, which is wonderful. But if you don't pay off the balance within the introductory time, the interest rate could jump to 13 or as high as 20% or even more. So read the fine print and seek the counsel of your banker or an advisor for another opinion and view. All right, so how do we maintain, how do we establish good credit? What does that look like? First thing, and I think we talked about this before, you probably will have access to these slides at a later date. You might want to write the phone number down or the website in the meantime. Maybe do what I suggest, put a little ticker, like a little note on your calendar around your birthday, at least once a year. Either go to annualcreditreport.com or call them at the 877 number on the screen and obtain a copy of your credit report with all the 3 repositories, Equifax, TransUnion, and Experian. The credit scores should be fairly similar, but sometimes there's a difference, and it's because not all agencies report the same data. Once you have the report, I think it's really important to read it thoroughly and figure out where you are. So it shows here that in 2021, which is really 3 years ago, data supports that an average credit score was about 714. Still a very good credit score. When we think about credit scores, the most important piece is payment history. 35% of your payment history makes up your 714 credit score. So how have you been paying your bills? Are you making just minimum payments? Are you attacking the whole balance? Number 2 is amount owed. So if you have a credit limit, $5,000, you want to stay within 30% of that credit limit. So you want to stay under 30%, even if you make the minimum payment. You never want to spend the whole $5,000 because that is definitely going to drag your credit scores down. Okay. Now, on the flip side, if you really need access to that capital and it's going to help you make money, or you have an emergency or some sort of one-time event, if you need that capital, go for it. It will impact your credit score, but I don't want anyone to be misled on the call today. You have credit for a reason. But if you're trying to increase your credit score, just know that anything over and above 30% on your card will definitely lower your score. Okay, the last 3 items that comprise your credit score are the length of history. The longer you've had credit, the higher your score, and the types of credit in use. If you work with a big bank, or you have credit with a large commercial institution, student loans, installment loans, those are good types of credit. If you have to secure credit at financial institutions like to buy here, pay here's, and alternative ways, that may lower your credit scores. But again, going back to need, if that's the only type of credit you can obtain, you go for it. It's worth it. And then lastly is new credit. Anytime you take out a new loan, it's going to take a couple payments. It's going to take you to pay down that loan or that credit card for a few months before it will increase your credit score. So those are the 5 factors that generally contribute to having great credit scores. So we talked about a couple of these already: checking your credit report, talking to your bank, always sort of keeping the lines of communication between your bank and you open. Be vulnerable, be honest. The advice that your banker will give you, if they actually know what's going on in your life, will be invaluable versus just hoping something doesn't pop up on a credit report. And if you don't have a great credit rating and a bank offers you a secured credit card, take it. It will do wonders for your credit. A secured credit card might be the equivalent of you giving a bank say $300 to keep on deposit. And in exchange for that, they will give you a $300 credit card limit. Use the card, maybe charge your gas on it for the month, or buy something that you can afford and then pay it off by the end of the month, and then do the same thing the next month and the next month. And typically after a year or a designated period of time, the bank will release the funds and typically offer you a traditional credit card. So those are all good avenues to take if you're rebuilding credit or you fell upon some tough times and you need to reestablish. You'll also see a lot of store credit cards being offered if you're shopping in an Old Navy or Macy's. Those two will help build your credit rating. So I'm definitely not going to discourage you from that. And then occasionally you might have a willing parent or step parent or friend who would be willing to co-sign or add you to their account as an authorized user. And in that instance, you would get credit for all of their good payments or bad. So you want to make sure that that person is responsible and it's a good idea to be on their account. Okay. So as we wrap up the presentation, a couple of takeaways. One is just reminding you to read and understand the basic business terms. So before you do any small business loans or lines of credit, you understand what you're getting yourself into. 2, create a solid management habit. So whether you're using budgeting on a piece of paper or a budgeting tool online, you really need to understand what's coming in and out so you can track your expenses on a regular basis. So that's really points 2 and 3. And then point 4, we talked about needs versus want in my niece Brookie. Savings isn't nice to have, it's really critical to have, because things will come up just as they do on our personal side. Things come up for a business. So you always want to have a cushion. And then number 5, pay attention to your credit card debt, because credit card debt on the business side is guaranteed by you personally. That's how small business debt works. So eventually, if you don't pay, it could spill over into the rest of your financial life. So make sure that you're not borrowing more than you can afford. And then number 6, always obtain your copy of your credit report right around your birthday, or if you have another date in mind, make sure that it's reoccurring and something that you can put on your calendar. So I'm going to open it up for questions, and I'm going to check the chat to see if we have any comments that I could address. So here's one from Ezekiel. So can a business get a loan against accounts receivables? 100% yes. So account receivables, for those of you who may not know, really is another word for invoices. So if Ezekiel owns a business and it's not the kind of business where he renders a service and the customer pays with cash or check the same day, he sends them a bill in the mail, an invoice. And that bill is considered to be an asset. So the way that it works, Ezekiel and others, if you have $100,000 in accounts receivable, you want to work with your bank to find out what is their advance rate. At Bank of America, our advance rate is 80%. So Ezekiel, if you have 100,000 out in receivables, the advance rate would be 80%. That's $80,000. That would probably be the maximum that we would look at lending to you. And there's some more criteria, but the short answer is yes, an account receivable is indeed an asset. And then we have a question from, looks like Mark, regarding secured credit cards. So I don't want to get too into the weeds with secured credit cards because I don't want to violate anyone's confidentiality. But generally, we would match you dollar for dollar. We wouldn't do a secured credit card for as high as $2,400. They're usually smaller, like $300, $500, or $1,000. And the only thing that would preclude you from getting a secured credit card at Bank of America anyway would be if you have outstanding debt that was never paid with the bank, or a recent foreclosure or bankruptcy or something like that. But other than that, we would match you dollar for dollar. So if there's anyone on the call who's had a situation where they didn't get approved and they want to talk with me about it privately, I'm actually going to switch screens for a second. I'm going to put up my contact information so that you can take out your cell phones and scan in my QR code. There you go. You should be able to see it. Irene, can we open up the line just to see if there are any questions or any feedback?
There is another question, the Q&A box.
Okay.
Yeah, when you are offered a loan, what does it mean the loans state $100,000 at 10% annually?
Okay, so it sounds like the interest rate is 10%. So 10% is a little higher than competitive interest rates today. Today, prime rate is 8%. So if someone is being offered 10%, that's the rate at which their money is going to be charged on a monthly basis. I don't know if I understood the question. So if it's your question and you want to follow up or you want to ask me something else, I think your line's open and feel free to do so. And while you're thinking of questions, if you just take out your phone and you scan in my QR code, I like to make myself available, just like Valerie does, to do one-on-ones